Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's update our view on euro currency. Obviously, this week is passed on the sign of the geopolitical shocks, the conflict on the Middle East once again, and mostly the attention of the big media was actually pointed on this turmoil on the Middle East and this war, and somehow traders mostly forgot about some other important moments that stands on the economical sphere. If it was not widely announced, it doesn't mean that they actually haven't been released. So particularly speaking, this is inflation data that we've got and some other interesting issues that we have discussed in the report. The one major conclusion that we could make right now for practical issues in the short term, in the coming week we will be watching for two big events. First is the Fed meeting, second is retail sales data. Particularly interesting retail sales is whether the Donald Trump tariffs already commented. So this will be the special interested. But although on the Fed issue nobody expects the rate cut, we have the reasons to suggest that Fed indeed could cut the rate on the coming week. That's why it might be some wild card. And the reasons for that we have discussed in the report. So if you're interested with that, you could read. So we talked about the a bit specific indicator in our Telegram channel. We have shown you the chart relation between the average short-term yields in the United States and the rate. And every time when this indicator reached the level of the rate, next meeting Fed they cut the rate. So now this indicator in a few days ago has touched the line of the rate. So if you're interested with that, there is a link in the report that you could find it in the Telegram. Second, there's a constant pressure from the Donald Trump administration on the Powell. Third, the job market is deteriorating. So if you take a look at the continuing claims in the United States, you'll see that they're rising and rising and rising. So obviously the job market is becoming worse and overloaded. So it's all this stuff tells us that although the market doesn't expect it, we closely will be watching for a Fed rate decision. Somehow I think that the chances to see the cut rate on the coming meeting are not as low as market expects. It might be really absolutely devastating impact on the short-term trading process, as you understand, and could boost euro in the moment. We do not expect that it will be constant upward action by the reasons that we already have mentioned, but for instance on the daily chart we could stay focused on the nearest target. It might be the completion of the butterfly and reaching 117.10 area. This is our next upside target. On the longer term perspective of the euro currency, we do not see any really issues that could reverse current tendency and could hurt our view, hurt our position that euro currency should feel a bit better in the nearest time. Everything now goes against the Donald Trump. So tariffs are not helping with resolving the budget deficit. Deficit is rising, the debt sale on the table. Market, they have to rise it nearest time. Donald Trump peace initiatives all has failed. So not only the conflict has stopped in Ukraine, but another conflict started inside the United States. It starts social unrests. There is a really drop in the coalition of the Donald Trump with Elon Musk first. Now the Tucker Carlson start criticize the decision of the Donald Trump in the way how he behaves with Iran. So all this stuff makes his position weaker, and we really worried that he could lose the elections in the House in the beginning of 2026. So he is becoming nervous, and he will be more nervous in the nearest time, and this will not help him. So This is only part of the factors that we have discussed today in the report. So if you would like to know about this and see more than we have discussed, just read the report. This time it's not really big because we do not have a lot of information this week. So from the practical point of view, as I said, this is next target. By taking a look at the overall performance, I would say that we need to be really careful and carefully watching for indirect signs. What are they? First of all, take a look on the market response. We suggested the wash and rinse. It has happened. But after the wash and rinse, we haven't got any constant straightforward downward action. Market remains and holds near the top. This potentially might be the bullish sign. Whether it means or indirect sign that Fed decision will be made on rate cut or not, I do not know. But potentially, this is the bullish sign. To get more confidence with this idea, we need to keep an eye on what's going on intraday charts. In particular speaking, I would be happy to see something like this, either triangle consolidation or let's say it might be rectangle consolidation, something like this. This also will be okay. So one thing that I would like to see, that market remains around the top, calling around the top. That will be indirect sign, bullish sign that market is building an energy for a possible energy release, and that might be triggered, for example, either by the retail sales or maybe by the Fed decision or something like this. Even comments from the Fed, those dovish comments from the Fed, could really make impact on the performance. Maybe we'll not get the rate cut, but the actual rhetoric of the Fed could change. The one thing that I would like to also see, that market will stay outside of the failed hand and shoulders pattern. This, by the way, this is another reason why overall context remain bullish. That actually recall how the previous week has been over. It was over with the failure of the hand and shoulders pattern. Despite all this Middle East conflict and so on, market has jumped. And that was the actually background of this action and the final of the previous week. Also bullish for the euro. And I prefer to see euro stands out of this consolidation. If it will drop further to the confluence area, these different scenarios might be. This will not hurt over the overall bullish tendency, but it just suggests that we will need to recognize the new price shape. We need to understand what's going on. Maybe this will be big head and shoulders with deep A, B, C, D first, then market will reverse up. We're not interested with that. So we're interested right now with the chances that the Fed will cut the rate and whether the euro will be able to stay in tight range. That's what we're actually busy with in the nearest few sessions. This is the primary thing to watch. So that's actually what I prefer to start with. On the hourly chart, currently performance stands in favor of this idea, because you can see that here we have minor hand shoulder shape that suggests probably some upper direction, which corresponds to the idea of the tight standing. So this performance doesn't break it. So it means that 1-2 sessions, but market should stay inside of the range, and that's actually what we need to. So I don't call you to trade it right now. So taking a long position based on this pattern, although you would like to, if you would like to, you could do this. But for me, it's more important to get the confidence and confirmation that this idea with the tight standing is correct. Once we will see it, then probably we'll try carefully to possess ourselves for the Fed decision, because that's what might be really, well, a big moment on the coming week. That and towards what we have, let's see what will happen.